Right. Last, we are dealing with the currently. In fact, let's just start from this. Okay. Good afternoon, ladies and gentlemen. Remember that currently we are dealing with the bank reconciliations, and there are two ways in which the information can be provided. The first way will be to be given the bank reconciliation for last month. Then you are given the bank statement for this month, and you are given the cash receipts journal and cash payments journal, which is the way that we dealt with in our previous class. But in some instances, instead of being given those things, you will just be given a story. Then from that story, you will be required to do bank reconciliation statements. Right. So for today, we're going to do question 2. And I hope you managed to do question 4 as homework, which was similar to question 1. And after doing question 2, you will be able to do question 3. Then on Monday, we're going to move on and do debtors and creditors control accounts. So on Monday, we'll move on to debtors and creditors control accounts. Right. So the following information for May 2016 relates to acting traders. So we're dealing with question 2. So this way, you need to understand the nature of the transaction and where it goes. So I gave you where you record all these transactions. If I still remember, I gave you from here on the first sheet or notes. I gave you the transactions that go in the cash receipts journal, but I'll explain again as we answer. I also gave you the ones that go in the cash payments journal, and I gave you the ones that go in the bank reconciliation statement. So please, I want you to refer to this if you don't understand anything. So under the first sheet or notes. Right, so we're going to deal with question 2. And we know that our entity is acting traders. So that would be acting traders. Right, so the way we shall answer this question, we shall answer all the parts simultaneously. We shall answer all the parts simultaneously. Right, we are told that, so we'll be doing the cash receipts, cash payments, bank reconciliation one time. The required was supposed to, number A, complete only the detail and bank columns of the cash receipts and cash payments journal of acting traders. So number A is the cash receipts and cash payments journal. Receipts journal. Normally, we also refer to the period for which we are preparing. This is for May 2016. And we need 2 columns. All right, we need the details and the bank. Right.
Sir, can I ask?
Yes.
Sir.
Yes, you can ask.
So the subtotal, when you were giving us notes, I tried doing the exercise. The subtotal is the opening amount, ne,
I can't hear you.
of the CRJ.
What are you saying?
I'm saying while I was doing this exercise, I'm saying the subtotal that you gave us on the amount, I mean on the notes, is the opening balance, ne?
Yes, that is the total that is already in the ledger before we do anything. the total before we received the bank statement. I think you're going to see how we record it now. All right, then we are also doing the cash payments, for May 2016. Again, would need the details in the bank. Right. Then on part B, we are required to prepare the bank account in the general ledger. Right. Our bank account right. Remember how we prepare an account. So we'll have our bank account. Right. Remember in a ledger, we've got the following columns: debts, details, folio, and then amount. We'll have debts, details, folio, and then amount. Right. So I want to do them simultaneously so that if something has to go in the bank account, we'll go to the bank account and record it. So your knowledge of bank reconciliations from what we did in the past will be handy here. And then the last thing that we have to prepare a bank reconciliation statement as at 31 May 2016. So we have bank reconciliation statement as at 31 May 2016. Our bank reconciliation will have two columns. We have our debits, our credits. Right. So these are our accounts, right? So we'll be doing A, B, and C at the same time. If something is to go to the cash receipts, we'll enter into the cash receipts. If it has to go to the bank reconciliation statement, we enter it in the bank reconciliation, on and on like that. So I'll be doing them simultaneously, these accounts. Right. Number one, balances and totals. The balance in the bank account on 30 April. Right. One thing that you have to remember, we are in May. So when they say 30 April, that means that's the closing balance for the last month. So here they are talking about 30 April, that means the balance from last month. That will be the opening balance in our bank account. Our bank account is in the ledger. So you have to check, is it a debit or a credit? If it's a debit, we would record it on the debit side. If it's a credit, we would record it on the credit side. So in this particular case, we are told that the balance that came from April last month was on the credit side, and it was 31,580. So we go to our bank account and record it on the credit side. So the opening balance from last month, you record it in your bank account. If it was a debit, you'd record it on the debit. If it was a credit, you'd record it on the credit. So that is 2016, and you'd record it on the first day of the month. So that's May. Okay, let me just. Right, so that's May 1. It will be called our balance. It will be balance brought forward because it's coming from the previous month. It's called our balance brought forward because it is a balance that is being brought from the previous month. So it will be a balance that is brought from the previous month. That's why we call it a balance brought forward. Right. Then the amount is 3158. Right. So the opening balance from last month of the bank account, we record it in the bank account. If it's a debit, you would record it on the debit side. If it's a credit, you would record it on the credit side. Right. Then next, our bank statement balance unfavorable at 32,126. And this is this month. Remember, we're in May. This is 31 May 2016. The balance as per bank statement is the first item in our bank reconciliation statement. The balance as per bank statement is our first item in the bank reconciliation statement. Right, so we have our balance as per bank statement. Now let's remember that your balance as per bank statement you are supposed to record on debit side, on debit column, if unfavorable. So always check what is our, right, then you record on credit side. So before you record your balance as per bank statement at the end of the month, let me just emphasize that this is at the end of the month. You have to know that you record on the debit if it's unfavorable, and on the credit is favorable. So you have to check, is it favorable or unfavorable? So in this particular case, we have been specifically told that this balance was unfavorable. So it has to go, that's 32,126 on the debit side. So that's 32,126. Right. Any questions on number one? So I'm not yet done with number one. Then the totals. I think that's what my friend was asking there. We're now there. The totals that are there before we receive the bank statement, those are the subtotals. So that 51,250 will be our subtotal for the cash receipts journal. And the 48,250 will be our subtotal for the cash payments journal. So the subtotals are the payments that we have in our cash book, in our cash receipts journal, in our cash payments journal before receiving the bank statement. So we're going to have subtotal in the cash receipts journal. We take that total for the cash receipts journal, which is 51,250. Then we'll have a subtotal in the cash payments journal. We take the total for the cash payments journal, which is 48,250. Right. Before I proceed, any questions on number one?
No, sir.
No questions.
Okay, I'll proceed to number two. Right. Items appearing on the bank reconciliation statement for April, but not on the bank statement for May. Right. If items were appearing in the bank statement for last month and they are still not appearing on the bank statement, it means those items are still outstanding unless if they are still checks. So if they are still outstanding, that means they will still have to appear again in this month's bank reconciliation statement because they've not yet been sorted. There are two types of transactions that have that scenario. We have got what we call outstanding deposits, which are deposits we have made with our bank, but they've not yet passed through the clearing process. They've not yet been recorded by the bank. And we've got outstanding checks or unpresented checks, which are checks that we've paid out, but maybe the recipients have not yet gone with them to the bank. Those two types of transactions. So if they were outstanding last month and they were in the bank reconciliation statement for April, as long as they didn't appear on the bank statement this month, they should still appear again in our bank reconciliation statement, excluding what? Stale checks. What are stale checks? These are checks that have gone for more than 6 months without being presented to the bank. They will no longer be valid. Right. So in this case, we've got these two checks. So you have to check the date to see if they are still valid. We are now in May. The first one was written on 30 November 2015. If you check, the 6 months have expired on 30 May. So it's now a stale check. Now a stale check is recorded in the cash receipts journal. A stale check is recorded in the cash receipts journal. Why? Because the day that we paid this money on 30 November, we recorded in the cash payments journal. Since the check is no longer valid, we have to reverse it. To reverse a payment, we don't cancel in accounting. We have to record a contra item in the receipts. So we're going to record this in the receipts. So all stale checks are recorded in the cash receipts journal to in order to cancel the payment. Right. That would be crazy dealers. Then we can just say stale check. That is 1,200. So stale checks, they are recorded in the cash receipts journal because they will be reversing the payment that had been recorded since the check is no longer valid. Right. Then the other check was on 4 March 2016. It only has 2 months. So that means it's still an outstanding check. It's still an outstanding check. So we are going to come here and record it. As long as it is still outstanding, we have to record it in the bank reconciliation statement. So we'll have outstanding checks. Right, our outstanding checks are recorded on the debit column. Why? We know that our bank statement increases on the credit side and reduces on the debit side. And outstanding checks, the moment they are presented to the bank by the recipients, they will have an effect of reducing the money in our bank account. So that's why we record them on the credit side. So that is check number check number 685. Dated for March 2016. ICT services. Right, so outstanding checks, we record them on the debit side of the bank reconciliation because they will have an effect of reducing our bank account. Right. So any amounts that are outstanding from last month, which have not yet been cleared, they will still be outstanding. They should still appear in the bank reconciliation statement. Right, then number 3, items appearing in cash journals for May, but not on the bank statement. Right, items, if they are appearing in our journals, but not on the bank statement, they should go to the bank reconciliation statement if they are genuine transactions. That means if they are not errors. Right, a deposit on 31 May 2016, 2,500. A deposit appearing in the journal but not on the bank statement, we call it an outstanding deposit. So it goes on the bank statement. So we'll have an outstanding deposit. An outstanding deposit is recorded on the credit side of our bank reconciliation statement. Why? Because when it's cleared, when it goes through the banking system, a deposit will increase your money in your bank account. And remember, a bank statement increases on the credit side. So outstanding deposits, they go on the credit side of the bank reconciliation statement. Right. Then there was also a check 759. In outstanding check, you just have to check the date again. It's 30 May. That means it's still valid. So that's an outstanding check. We record it with the other outstanding check that we already recorded. So we'd say this is also an outstanding check. So any checks that we have recorded but not yet recorded by the bank are outstanding checks. So check number 759, dated for May 2016. That's Bunny. $3,085.
1,085.
Right. That's number 3. Any questions on number 3?
No, sir.
Yes. Okay. Number 4, items appearing on the bank statement for May, but not. Hello?
Can I please take you back a bit?
Yes.
So by number 6 says prepare the bank reconciliation statement acting traders as 31st May. Don't we also take the 31,500 and credit it, sir, as our balancing, as our opening?
Which one? This one
That
goes.
one.
This is the bank account. It doesn't go in the bank reconciliation. The balance of the bank account that goes to the bank reconciliation is the closing balance that we're going to calculate, not the opening balance.
Okay, I'm just making reference. I made a mistake yesterday. Okay, sharp.
Hello?
I'm saying it's okay, sir. Sharp.
Okay. Right. Then number 4, items appearing on the bank statement, but not on the cash journal. Right. If items are appearing on the bank statement, but not on the cash journals, we'll either enter them in the cash receipts or cash payments journal, unless if there are errors made by the bank. If there are errors made by the bank, they will go to the bank reconciliation statement. But if it's money that we received, which we didn't know, which is on the bank statement, we record it in the cash receipts. If it's a payment made through the bank, which is not recorded, we record it in the cash payments, Right. So we've got a direct deposit from Mickey Mouse for rent, 2,500. A direct deposit, that means Mickey Mouse deposited money into our account, but we didn't know it. So we record it in the cash receipts journal because we are receiving money. So we have in the cash receipts, Mickey Mouse, direct deposits, it was for rent, 2,500. So if our customer directly deposits and we see it on the bank statement, we are receiving money, it goes in the cash receipts journal. Right. Then interest on bank overdraft. If you have got a negative balance, you will be charged interest. That means you pay the bank. So that is a payment. But if it was an interest on a positive bank balance, it was going to be a receipt because we receive the interest from the bank. But if you have got an overdraft, you pay the bank because you'll be owing, you'll be having a negative balance. Right. So Dave, interest on bank overdraft, 750. So you have to check if the interest was only favorable or unfavorable balance. Right. Then we have ledger fees and cash handling fees. These are charges that are made by the bank for operating your account. They go to the cash payments because you'll be paying. So they have ledger and cash handling fees. 881. Or you can just say bank charges, it's still okay. Right. Then a refer to drawer check received from data Teletubbies. Right. A refer to drawer check is a dishonored check. That means your customer paid you, but that check has been rejected by the bank. Maybe they don't have enough funds, or maybe they made an error on the check. So a dishonored check, we have to reverse that receipt because remember when we received it, we recorded it in the cash receipts journal. So to reverse it, it will be recorded in the cash payments journal. So we'll have Teletubbies, RD check. $450. Right. Then a deposit made by another client of the bank was incorrectly deposited into acting trader's bank account. So someone deposited, but by error, they put it in our account. So this is a bank error. So it goes to the bank reconciliation. So they have to reduce our amount in the bank. So it goes on the debit side. It will go on the debit. Why? Because they have to reduce that amount that we have when they correct the error. So would say bank error, deposit by another client of bank. So we debit it. If the payment made by mistake, we would credit it because we'll have to increase the amount in our bank account. Right. Then a stop order for monthly insurance premium of 1,250. This is a payment. A stop order, that means it was paid directly by our bank. So it goes to the cash payments, you know. Insurance. Stop order. 1,250. Just a second. Right. A check drawn by another client of the bank was incorrectly debited into the account of acting traders. Someone paid, but by mistake, they debited our account. All mistakes made by the bank, they go to the bank reconciliation. So they have to increase our amount because they wrongly reduced it. So it will go on the credit side. Remember, we said the bank statement increases on the credit side. So we have bank error. Withdrawal by another client of bank. That will be 10,350. Right. Then additional information. Check number 736 for 1535 issued to Barney Furnitures for furniture. A purchased was incorrectly recorded in the cash payments journal as 1835. So they were supposed to record 1535, but they recorded 1835. That's an overstatement of a check. Overstated payments we record in the cash receipts journal to reverse the excess. So when a payment is overstated, we record in the cash receipts journal. If it had been understated, we're going to record in the cash payment journal. So this is overstated. So we'll have
Difference of
receipt, we only record the difference.
difference.
So we'll have Barney Furnitures, overstated payment, which will be 1835 minus 1535. What do you get?
300. 300.
300. Okay, thank you. Right. So these are all the transactions. Right. After recording all the transactions, now we balance and total. So here in the cash receipts journal, we'll have our total receipts. Right. The receipts, these total receipts will go to the bank account. The total receipts will then go to the bank account on the debit side. Remember, the bank account in our ledger, bank is an asset. Because it's an asset, it increases on the what? Debit side. So they have May on the last day of the month, 31. Total receipts. Folio, it's CRJ to show that it's coming from the cash receipts journal. The amount, that's 55,250. Right, that's how we post the cash receipts journal. Right, any questions on the cash receipts journal? Then we do the same for the cash payments journal. We find the total, which is called the total payments. That will be our total payments. Right. Then this total payments is money going out. So it has to go in the bank account. It will reduce the amount in our bank account. So we record it on the credit side on the last day of the month. Total payments. That's CPJ. 51581. So that's how we post our payments. Right. After posting our total receipts and our total payments, we then balance our bank account. To balance your bank account, you have to record the bigger total of the two sides in the same line. Here we've got 55. Here we've got 31 plus 51, which is 8, somewhere around 82, 83. So the credit side is larger. So we take that total of the larger side and we enter it on both sides in the same line. So we take the total of the larger side, we enter it on both sides in the same line. Then on the smaller side, we enter the difference. On the smaller side, we enter the difference above the total. We'll call it a balance carried forward, which we're carrying to the next month using the last day, the date of the last day of the month. That will be the difference, which will be 83 minus the 55. 27,911. Then that balance, you should also bring it down on the bigger side, but now on the first day of next month, June 1. It will now be called balance brought forward. So in June, they will now be calling it the balance brought forward, which is 27,911. Right. So to my friend who was asking, this is the balance that we then take to the bank reconciliation statement. This is the balance, the final balance now, the closing balance is the one that will now take to the bank reconciliation statement as balances per bank account. Right. When you are checking where to record, you consider this last balance, the balance brought forward at the end, not the balance carried forward. You don't consider this one, you consider the last balance here. If it's on the credit, you enter it on the credit. If it was on the debit, we're going to enter it on the debit. But considering that it's on the credit, we're going to enter it on the credit side. That will be 27,911. So if that final balance was on the debit, we're going to enter it on the debit side. Right. After recording everything, then you find the totals. And at the end of the day, if all the differences have been noted or identified, at the end of the day, our totals should be the same. So that's our bank reconciliation statement. Any questions? Right. These are the two ways that we do a bank reconciliation. So you at your own time, can you do you can try the number three as homework. You can see how you understand. Right. So thank you very much. Sorry for disturbing your weekend. So we'll continue on Monday at 6:15. We'll be dealing with control accounts. Thank you very much and God bless you richly.
Thank you.